Hey, what's up, everybody? It's your boy Juju, and welcome back to the 1% of Juju podcast, where we teach you the practical steps to live your life like the 1%. Obviously, you see me, I'm back. Make sure you go ahead and subscribe, like all that. What we need to do. We are on YouTube, all your favorite podcasting apps. So do all that. But I know that you guys didn't come here to listen to me talk all day long. We got a special one on our hands, and we have a special guest on our hands. So obviously, you guys know that we are part of, I think it's the third episode of a 5-episode series on how to invest, how to start investing, and how to start your investing journey. And today we got a very, very special guest, one of my homeboys that I will stop talking and let him introduce himself. But my boy Jason is in the building. What's up, Jason, man? Thank you for joining.
Yeah, of course, Juju. Thanks for having me, man. How you doing?
Yes, sir. I'm doing good, man. Thank you so much for joining. Obviously, we'll get into like why you're here, obviously, and what your expertise brings. But I'm excited to talk to you. But can you tell the people, for the people that obviously don't know you, who you are, a little bit of background about yourself, how you got to where you are, and how we got to this conversation?
Yeah, of course, man. Introduce me. My name's Jason. Currently, I'm living in the Bay Area, so I'm in the North Bay. So a lot of people just think San Francisco, but I'm more like Northeast, past Berkeley, Oakland, those areas. Currently, I work in finance. I'm a senior financial analyst at Sephora over here in the city
of San
Francisco. So, my background has always kind of been in finance. Through school and, to my first job, I was straight into, actually sales at first. But I always knew I wanted to, do more analytical type of work. Mm-hmm. So, got into, like a starting financial analyst role type of vibe, and built from there, got a couple of years experience at a startup.
Tell me a little bit more. Sorry, I don't want to cut you off, but tell me a little bit more about that, because I feel like I went the opposite route where I started going towards like that financial analyst journey and completely transition out of that to go into sales, because I could not, spreadsheet, like sitting in front of spreadsheets all day long. And although I do like and enjoy numbers, like just staring at numbers all day long, I couldn't do that. I needed some people, some interaction with people. But like, tell me, like, what motivated you to like wanting to do more analytical stuff coming from doing sales?
You know what? That's funny, because I'm also like a super people person. So that's kind of why I went into sales to begin with. I thought, that's an environment I would thrive in.
Yeah.
Just talking to people, working with people all day. But to be honest, that was fresh out of college. So like, I didn't really understand how much of a grind sales would be.
100%. Yeah.
I thought it was just going to be, put in the work and it's big time reward, commission, stuff like that. Mm-hmm. But from the get-go, I was just, completely straightened out of that notion. It's work on a different type of pedigree, different type of level. And honestly, at that time, like, I wasn't taking the swings so well, Like, you're either killing it or you're not, right?
I see that a lot. That a lot. And a lot of people don't realize like when you're working in sales, like the good days are really good, but the bad days are really bad. You know what I'm saying? Like you talk to like 3-4 people and they're coming to you with all types of problems. They're mad at you for this. You know what I'm saying? Like you get yelled at for stuff that is not in your control whatsoever, but they're just coming at you and they're just like, this is your fault. You know what I'm saying? Like you're the person I trusted or whatever. So now I could see that. Like I can understand that. And I think that a lot of people, when they go into sales, like they don't necessarily know that part. And that's the part that they kind of learn the hard way. But it's a good, I just always feel like it's a good learning experience. But obviously today, the conversation is going to be centered. You guys see the title. The conversation today is going to be centered around how to pick stocks, right?
Right.
And the question I was going to ask you, and just a quick disclaimer, this is by no means our recommendations to you to go out and do exactly the same thing or to buy the stocks that we're buying. All we're trying to give you, and we're trying to just have a conversation, Jason and I today, about how we go about picking stocks, what has worked for you. And obviously with whatever we've tried, what we've done in the past, we've had success, we've had losses, but overall, a lot of people I think that come to me and they tell me like, oh, well, I don't even know where to start. You know what I'm saying? Like, I don't like, what stock should I invest in? Like, is it too late to buy this stock? But I want to get people in a little bit of a mind frame to have some kind of knowledge when it comes to purchasing stocks. But for you, Jason, what tell me a little bit about your experience trading stocks. When did you start? What kind of success you've had? You don't have to give me an exact number of your portfolio, but tell me about how you got started in your investing journey. Like, do you do it yourself? Do you use advisors, things like that?
Yeah, of course, man. So, back in the day, like I would catch like my dad watching like Mad Money, right? So I was just curious what this stuff is, and that's kind of what got me interested. And then I watched Wolf of Wall Street, and I was like, oh, man, like
that's what got me into investing. I ain't gonna lie,
right? Honestly, it sounds a little bit outlandish, but it's like it just piques your interest.
Yeah.
So, when I was in college, I was always interested in it. So I was applying for different internships, and I had an internship at Fidelity Investments.
Mm-hmm.
So that was my first like real experience working close by with people's portfolios. I got to sit in on meetings, people, high net worth people, double-digit millions and higher.
Yeah.
Like that was in LA, in the Valley in LA. So one of the
who came in, I know those portfolios looking nice.
Well, one of the office's main clients was Michael Jackson's mom. So,
dang!
Some of these people coming in had real money.
Mm-hmm.
So it was really interesting getting to sit in on like these meetings where they're building out or updating or changing portfolios, signing over trusts and stuff like that.
Yeah,
and see different strategies being put in place like on a real note. So that's kind of what got me really, really interested in it.
For sure.
Learning how mutual funds work, how to pick between different type of growth levels and stuff like that.
Yeah.
Essentially, that internship's what kind of piqued my interest, right? I didn't end up working there after school, but I already knew a lot of the basics to kind of start applying all these different like topics and concepts myself. So what I started doing was I started tracking stocks. So before I ever traded, I just started tracking, looked at different metrics, tried to decide which ones I liked, which ones I didn't, and kept a look at them over like a month, 2-3 month basis, see what I was right about, see what I was wrong about. So that's kind of how I started getting into it before I ever even started like purchasing and building an actual portfolio.
Yeah. And what are some of the metrics that you looked at? Because I remember when I started, and I've gotten to a point where like there's a few things that like I focus on and that I don't care. And like we didn't talk about those, but what are some of your metrics? Because I know for myself, like I'll look through like, let's say like the 6 month, 1 year, and then something like a 5-year history of the stock if I'm looking at something more conservative. And then outside of that, but I know that there's so many when it comes to like the statistics and the analytics that they actually give you, right? Like there's like the cash on hand or the amount of debt that a company has. What are some of the metrics that you keep track of that have helped you pick the certain stocks or whatever?
So to be honest, like at a very basic level, some of the things you just gotta pay attention to is the stock price. Especially, relative to the type of company and the industry that it's in. Next thing that I would kind of keep track of is market cap. So how much of the market does this company pretty much capture, right? The higher the market cap, the bigger impact this company has. So if you look at like the Amazons, double-digit or triple-digit billions or something like that. So those are two main drivers. Those are two main drivers to how like some of these trends are gonna go, right? Something else to look at is a 52-week range. You can look at a smaller or a wider range because this is telling you how the stock has been trending in recent times.
Right. No, those are really good, and I especially like what you said at the beginning, which when you spoke about the stock price overall, because I think a lot of people overcomplicate this, because at the end of the day, right, like it's okay, well, what's the stock price and do you think that it's going to go up? Like when I although I do look at the last year, but overall, like I try to do research on like what is this company, and based on what I know and the basic knowledge that I have about the world, like, do I think that this is something that in the future, right, is going to be wanted? Like, is this a product or service that in the future is going to be wanted by the people? Like, and that's a little bit of the sales mindset coming from me, is like, is this something that can be sold to a lot of people? Like, is it scalable in the future? And do I see, opportunity for growth for this in the future? So that's pretty interesting. But I like what you said as well about the market cap. But I don't know, like, if you're able to like elaborate on that a little bit for the people that are pretty like, novice when it comes to investing, like what exactly like does that mean? And like what would the difference be between a company like Amazon and let's say like a smaller company, and what would be the impact of that?
Yeah, I mean, in the most like basic terms, the market cap is a measure of like how much the company is currently worth.
Mm-hmm.
So it's calculated, I think it's the price per share times the number of shares that the company has.
Got it.
So that already from the price, you just know like where it's valued, where the company is valued.
Mm-hmm.
So when we have a Tesla, that's, what's Tesla at now?
What was it today? It was like, it's in the 800s. Let's look it up. Actually, we can do that live.
Something like that, versus a company at 100. Already, like this one's valued at a completely different level, right? And once you add in the total shares to that calculation, that kind of tells the story. So essentially, market cap is a measure of how much the company is currently worth based off their price, their stock price, and the number of shares that they have.
Shoot, wait, Tesla is trading at 1,114. Right?
Yeah.
Dang, I might consider retiring.
Hey, if you've been in for a minute,
it might be time for me. Oh wow. Okay. Yeah. No, Tesla's doing really well.
Look up what's Tesla's market cap.
It's a good question. Tesla's market cap, it's 1.1 trillion.
All right, there we go.
Yeah.
So the bigger the company is, the higher the market cap's gonna be. Actually, not necessarily, just the more valuable the company is, the higher that number is. So that's
100%.
The more one of the main indicators of where a company's kind of positioned.
Right. That makes sense. No, and that helps, because taking a look at that, I think that like it's simple. But for you, when you look at those things, how do you decide to say, okay, well, I'm going to invest in a Tesla whose market cap is obviously through the roof, and we know that we have history and it's going to continue doing well, and deciding, well, let me look at a company with a smaller market cap, but I believe that in the growth of this one, like how do you take a look at those companies, or is that something that you kind of stay away in your investing strategy?
So yeah, I mean that kind of, I guess that's just a question of like what type of investment strategy you're into, what you want to do. Do you want to be more aggressive, make a lot of money in a shorter amount of span?
Yeah.
Or you want to keep steadily investing in something trusty, something solid that is going to guarantee you XYZ.
Yeah.
The same duration, right? So at that point, it becomes like a matter of like strategy, what you're trying to do.
For sure.
And what you feel like would be good for you moving forward. Like, let's say like, Tesla, for example. Tesla's probably the backbone of so many mutual funds, right?
Mm-hmm.
If you're investing in ETFs, you probably have portfolios with like Tesla.
With Tesla in it, yeah.
All of the major ones. So in that way, I mean, like it's a very, very, it's very good to understand like what you're trying to do and like what tools are available for you to kind of move forward in that manner.
Yeah, I like that you say that, because there's this, it's one thing that like through this whole series that I'm preaching quite a bit, which is make sure that like you understand what your goals are and what you're trying to do with this investing thing, because there's no such thing as like two portfolio for two people that should look the exact same, right? Like two people are going to have completely different goals, and make sure that, you know, as you do, obviously I'm this dude on the internet, like speaking, but like be very wary of people on the internet telling you need to buy this stock or you need to buy this, because that may not be appropriate for your situation or what you're trying to do. So I love that. But you did touch on like mutual funds and ETFs. When you go about, like, I don't know how much of those you have in your portfolio. And for myself, I think that I do keep some kind of like on the back burner, like for this has almost become the safe part of my investing, where I almost keep my savings at. But for when you think about mutual funds and ETFs, what do you look for? Like, do you take a look on a consistent basis at, you know, like what stocks are in the mutual funds, or like how do you pick and choose mutual funds?
Yeah, well, before I go into that, let me just add to what you were saying also. Something else to be aware of always is, you know, your financial commitment, like where you're at financially, you know what I mean?
Yeah.
And that goes into, you know, not just buying whatever people tell you online to pick.
100%.
Like, you got to be constantly aware of your financial situation and that how that aligns with your investment goals.
For sure. Yeah, that makes sense.
Yeah, but as far as mutual funds, the best thing about them is this is all, like, for the most part, public stuff, right? So there's always performance details. You can, like, before you even get into a mutual fund, you can look it up and look at how it's performed recently.
Yeah.
You can get a full breakdown of every stock, every asset in that mutual fund. So that's the first thing you got to do, see how it's performed, at least to kind of gather a sense of how you feel about it moving forward.
Yeah.
Next thing you want to do is kind of see, you know, if it's like a S&P 500 type of ETF. So like if it's mainly built out with like the companies in the S&P 500, like the 500 biggest companies.
Yeah.
Then you know it's gonna make you money. Overall, what we've seen in like the past couple of years is market's just going up. There's
100%
stuff like that. But people who've been invested in mutual funds been, you know, going up for the most part in the past
steadily yeah,
over the past several years. So you know that if it's backed by the S&P 500, it's probably gonna keep being successful over time. So there's a lot of different ones out there. It's an entire industry. So at that point, it becomes, you know, finding the right ones for you. And I think like that's where some of the bigger investment firms come in, like the Vanguards, Fidelity,
100%,
Franklin Templeton, like bigger names that you know you're gonna get a good product.
Yeah.
And these investment advisors, they're paying analysts lots of money to do research on all these stocks and put them together, right? And so that kind of goes back to like one of the first things I was saying, like when you're looking at stocks, you know, people kind of do overcomplicate it. You know, there's fundamental analysis, technical analysis. Fundamental is kind of like is essentially what I do. I look at, you know, the main numbers, the market cap, like I was telling you, the price, the price to earnings ratio, stuff like that. And I look at the stock chart, like see how it's been trending over the recent times and any new news about it. The reason I'm not going to spend too much trying to calculate all these different numbers and percentages is because there's people literally paid to do that.
Right.
People literally pay to do all the technical analysis behind all these stocks and recommend them. And a lot of these mutual funds and portfolios like that, they're built by experts. So
100%.
I think it's very good to understand that. And to be honest, that's kind of how I kind of pick my stocks sometimes. I'll go to the top performing mutual funds or ETFs and see what's in there.
Yeah.
See what sector is following and see what new companies are hyped up or, you know, emerging in that.
Yeah, and remove the middleman, go buy them by yourself.
Exactly.
Yeah, that's smart. No, I love that. And I like, so there's a few things that you mentioned in there. So number one was on, you know, some of the biggest mutual fund managers that are out there, right? So you spoke about like the Vanguards, the Fidelities, and things of that nature. And I spoke about that in a previous episode, how when you picking out mutual funds, you can't just look at mutual funds as far as like, oh, the fees here are cheaper, therefore I'm going to go with that one, because others are more expensive because they're paying analysts a little bit more money, right? They have the best analysis, they have a lot of history behind them, and the years of history and of performance of a certain return is what makes those funds more expensive. And that means that you can maybe rely on them. Obviously, there's nothing guaranteed, but you can rely on those a little bit more than another fund that may have come out last year, or a smaller fund that came out a couple of years ago. And then the next thing is, like, I was actually going to say the same thing, because when it comes to like trading stocks, yeah, you want to do a little bit of research if you're going to go out and purchase stocks individually by yourself. But when it comes to mutual funds, I would actually encourage people, not necessarily encourage, but I would say that like people need to be out here diving and digging deep into what's in the, obviously, like you said, like have the basic understanding of like what's in there, what am I investing in, how does that actually help me with my goals. But there's no need to be, mutual funds can be pretty expensive, to be honest. But like the reason you're paying for it is because you don't have the need afterwards to just be in there, like, tracking every single stock in there. But that's actually a good idea. Like, I never thought of that. And I think that the first time when we spoke about you coming on, that's the first time that you spoke to me about actually going into some of the top performing funds and taking a look, about at what's in there, and then investing in that and buying that. And actually, since the last time we spoke, I started doing that and taking a look at that. And I kind of like that. But when it comes to like investing, how do you pick industries? Like, do you usually pick like industries as far as the things that you think are growing, or do you try to diversify and stay, financial sector, energy, all over the place, technology? How do you go about picking industries?
I definitely try and diversify as much as possible. And this is kind of where, like, I feel like if you're going to invest, you kind of got to do your due diligence in terms of keeping up with trends and kind of reading the news and stuff like that. Right?
Yeah.
It's hard to invest in industries or different sectors within an industry if you don't know what's happening or what's going to happen. Right? For example, like renewable energy, we know that it's a big thing. And actually, like, I have a couple of stocks that I got into when they were $40-$50, and they're well in the triple digits now,
right?
That are in solar or other sectors like that. So it's important to diversify, and it's important to keep up with news, because that's what's gonna, it's gonna dictate how a lot of these stocks are moving. Is that something that you kind of do already? Like, do you try and keep up with like?
Oh, 100%. I feel like you almost have to. I always try to keep an eye. Like, I think I always take a look at like what's out there, like what's going on, like what's the big, and that's gonna go into like a topic I want to talk about. But what's the big, what is everyone talking about right now, right? Like, and that's kind of like how things move and how I decide I pick out my investment. But one thing that I've seen going on as well is kind of like with social media, right? Like people becoming very dependent on that to make some of their stock decisions. But I think that it's interesting because if there's something that comes out that becomes popular, like, I don't know, someone that invested in TikTok, maybe like at the beginning of the pandemic, right? Like probably has done decently well on their stock. I haven't kept track of like TikTok or whoever owns TikTok. I haven't necessarily kept track of that, but I'm thinking like, so there's certain things on social media that are important that can have an impact. But I also think a great example is like last year, I think it was last year that the stock split happened between on the same day with Apple and Tesla, right? Like, and it was crazy. Like on social media, everyone was talking about it. But then a couple of days later, those stocks started going down and people were freaking out. They didn't know what was going on. It's mainly because a lot of people were panic selling and things like that. And people probably lost a lot of money, at least that I've seen where from my perspective, because a lot of people were going into those things like without the experience. So how do you balance knowing I got to keep up with the times and knowing what's out there and what's going on, but also understanding that like looking at what's going on social media is not an investing strategy.
Yeah, and like you did hit it in the head. It's not a strategy. It's social media is a tool, right? Like
100%.
it's a way to stay informed, but it's not like you should not be just taking advice straight up off of social media. And like to kind of go into that, and which will help answer the question more. It's like the GameStops, right? These are popping off of Reddit, and like, don't get me wrong, these are great opportunities to come up with a buck. But that doesn't mean you just buy straight up, right? You gotta watch how it's moving, be kind of aware of when to buy, and even more aware of when to get out, because these stocks were catching fire quick and crashing quick too.
Yeah.
Right. So if you're just buying and selling off of what you're hearing, by the time you buy, you miss the opportunity. By the time you sell, you've probably lost a little bit of money.
Yeah.
So that's, social media is a tool, not necessarily like a piece of advice, right? So it's good to hear about something from there. If consumers are driving the prices of a stock for XYZ reasons, it is what it is, right? It's another opportunity, but you kind of gotta know what you're doing and what you're looking for at the same time. Hey, did you end up getting into either Tesla or Apple when they split the stocks?
Yeah, I bought both, and it's been doing pretty well for me because I just kind of like sat there and held on to it, right? Like it wasn't anything crazy. Like it wasn't like I just decided to like buy because of social media. I just thought it was a really good opportunity because I had been wanting to buy those stocks for a while, but I just thought they were too expensive for what it was at the time. So I just saw that as a really good opportunity.
It's a good move. It was a good opportunity.
Yeah, and I think that's really like that's the strategy behind those companies, like splitting the stock. But you got to like understand that, not just like look at it as like, ooh, everyone is buying it because whatever the reason is, you have to have your own reason for buying it, not just everybody else's reason, right?
Yeah, and know what it is essentially, especially if you already have stake in the company.
Yeah.
You gotta understand how that might affect you.
100%. And let's talk about that a little bit. Like what even is like a stock split? Because you spoke about the AMC and the GameStops, and I want to talk about that a little bit more. But I do want to talk for a second about what a stock split even is. Like, because a lot of people that are listening, they might be listening to this and they were like, I knew something was happening at the time, but like I have no idea what.
Yeah, so I'm gonna try my best to explain it. When a company, it's a strategy, right? When a company wants to reach a specific type of goal, maybe be more liquid. Maybe the price is so high that the stock is not that liquid and people are not purchasing and selling it that much because it's a little bit expensive. So when they split the stock, the price they would make, basically, let's say you have one stock valued at 40.
Mm-hmm.
If the company splits the stock, essentially, to simplify it, you now have two stocks worth 40. So now it's worth the same, just split up, and is more attainable and viable for people.
Or you would have two shares, but worth 20 each. But overall, your equity indicator would still be the 40 exactly.
Correct. Yeah. So it mainly, or a lot of times when companies split their stock, is to make it more liquid and to kind of increase activity.
Essentially when they want cash on hand.
Correct.
Yeah.
Like I said, it's like you said earlier, it's a great opportunity to get into a surefire situation and company, especially since you're buying, the value doesn't change. They're just adding more shares and splitting the stock.
100%. Did you get into it when crazy things like what's it called? Like the GameStop, like you spoke about, was going on?
You know what? I did benefit from a couple of buy and sales of the AMCs and the GameStops.
Dang, I
And
didn't.
also another stock, it was called Jumia, JMIA is the symbol. I was able to get into that one when it was at about $19 and sold at around like 80 or something like that.
Dang, man,
Yeah,
those are
so
always nice, man. When you can hit a quick lick on some of those stocks, that's always nice. I think so. How do you so when crazy things like this happen? How do you take advantage of the moment instead of being on the losing end where a lot of people like jump in too late or sell too fast or whatever it is?
first thing I think, especially if you're starting off, I think it's important to kind of build out like a table or something, like
Mm-hmm.
something visual you can follow. Um, that's like for example, I have open right here a tracker, and I have two sections of the trackers. For one is for prospective stocks less than $50 each. One is for
Yeah.
stocks greater than 50 and on.
Mm-hmm.
Um, and so one of the first things I would do is to write down what I'm looking at, the price where it starts, you know what I mean, and like a target price. Like let's say for like GameStop, for example, I would write down the price when I looked at it this morning and then look at it tomorrow morning and see what happened, right?
Yeah,
Um,
yeah, yeah.
opening versus ending, what happened within that day. That will kind of give you an idea of how the market's moving, right?
Mm-hmm.
Also, the after hours value can kind of tell you a little bit of a tale about what's going on. From there,
100%.
you can kind of start making decisions. So you don't just look at it and buy based on where it is at the moment. You got to buy based off where you expect it to go. And you can only do that by looking at the previous trends and news and stuff like that.
Bro, that's so insightful because I think that like I have the same mindset when it comes to like selling stocks. Like of like I hear a lot of people like uh and they ask me like when do you sell a stock or whatever. And my mindset is always like where if you're in a stock, if you're holding on to a stock, would you buy it again? Would you buy some more today if you had like extra cash, right? Like maybe you want to take advantage of other opportunities, but would you buy this thing again today, like based on where it's going to go? If you just think it's going to steadily stay where it's at, there's almost no point unless it's a stock that provides you a lot of dividend income. But like otherwise, there's no point of just like letting it ride and sitting there, for forever. But so if
Right.
you don't believe that the stock is going to continue increasing, if you would purchase it again today, there's almost like no point in holding on to it. But for you, when do you sell a stock? Like, do you have like a time where you would sell a stock?
So it depends on how I feel about the stock, right?
Mm-hmm.
Um, there's stocks that are bought in established companies that I see a successful future in.
Yeah.
Um, I'll stay locked in even when I start seeing slight dips, right?
Mm-hmm.
Because I'm basing it off like the research that I've done, um, how the company's doing, the sector that the company's in, and what I expect from them in the future moving forward, right? Like, for example, if back in the day you had Tesla stock and you sold it right when you saw it drop a little bit,
Yeah.
you would have lost an opportunity, right?
Right.
So it gets hard because if you're investing in something and you see it gain some money and value, and then it might drop for like a month or 2 month period, a lot of people want to sell, right?
Mm-hmm.
So that's where I think it's very worth it to kind of do some research and see, why is it dropping? Do I expect it to drop even more? If not, good. Like hold on to it. It's probably gonna keep going back up.
Yeah.
Um, so on the short sell, it's for companies that I don't necessarily believe in long term. I see like
Mm-hmm.
a short term opportunity, a GameStop, a AMC.
Yo.
Those are for sure not sustainable businesses moving forward, right?
Mm-hmm.
But that doesn't mean I wouldn't buy into an opportunity when the stock is spiking like that and then sell ASAP.
Yeah.
So it's important to get the thresholds. See, like, have you talked about like the peaks and trough method of looking at stock charts?
I haven't yet, but that should be like, let's touch on it like for a quick second. But like, it definitely should be something that like we talk about a little more.
Yeah. So like just looking at the stock charts, I mean,
Hmm.
there's always peaks and
Yeah,
troughs, like high highs, low lows.
low lows, 100%.
Um, Typically, I would not sell at the first little indication of going down, right? So like
Hmm.
let's say your stock is climbing, 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 it hits like 90 and it starts to drop a little bit. A lot of people would start selling.
For sure.
I'd wait a little bit longer because based on past trends, when it starts going down, it's gonna reach a low point and start going back up again.
Yeah.
At that second point where it starts going down, that's when I'll probably sell.
Huh. I've never heard
Because
of that strategy. That
yeah, peaks and troughs. It tells you a lot. Looking at the charts tells you a lot about
yeah,
where it's gonna move, and especially if you're looking at 1 day trends, you know, it's gonna give you a lot of indication as to when's a good time to sell.
dang, I might need to write this down for myself, man. I need to look more into this. So peaks and troughs.
Yes, sir. It's
No.
actually it's not too bad, right? Like once you start getting the basic understanding of like what some of these numbers are, um, the chart's literally painting a picture for you of everything the stock is doing.
Yeah.
If you can start
And
understanding those chart patterns, that's like one of the main ingredients to a beautiful investment pie right there.
100%. And why the second dip? Like why not wait till for like a third, or is that depending on the stock or things like that? Like why is it the second dip?
Well, it kind of depends on what you want to do, right? A lot of times what I've seen, but this is only specific to like the stocks that I was in at the
Hmm.
time and I sold. Um, Once it peaks and starts going back down, it might not hit that peak again until it spikes the next time.
Oh, for sure.
So once it peaks and starts going down, it might go up again, but once it starts going down again, then it might not reach that high value again. That's why
Hmm.
it's important to look at the previous trends and see at that level where you're at. Has this stock reached this in the past? Yes or no? If no, why has it reached it this time? Do I expect it to stay this high or do I expect it to go lower?
Yeah.
Right. So that's where you just look at it, look at the previous trends, and ask yourself like logic questions like based on this chart pattern, what do I see happening moving forward?
Yeah, for sure, man. That's great. Dang, if y'all ain't subscribed to the 1% of Juju podcast, you missing out because this is it right here. And you got so much information. You even I'm here sitting here learning something. But no, but that's great, honestly. And I mean, I could sit here all day and we could talk about this stuff. But I want obviously, where can the people find you if they want to talk about this some more or have more information or any services that you want to plug in, man? This is your time.
You know what? I'm gonna make myself a lot more available to the people.
Hmm.
You can find me on IG. My name's Jason, last name Mageria, Mageria. I'm gonna make it available to the people. Um, Usually, I'm actually trying to produce more content. I used to be heavy into photography
Yeah.
and videography, so I'm gonna start producing more content. So might start doing little short clips, giving out some tips and advice on little things here and there.
For sure.
Um, but yeah,
Yeah, I'll obviously put all your links in the description and anything, whenever that content is ready, just let me know. We'll have you back on the podcast and obviously we'll plug all your stuff. We'll share all your stuff because this was extremely useful, extremely valuable, and a very good conversation. But yeah, any final words, like any I guess piece of like I know we said that we wouldn't give advice, but like any piece of advice that you would give people or things that they should keep in mind when as they enter
yes,
their investing journey.
advice. Let me put you on to something real quick that's helped me out a lot.
I love being put on, man. You know
There's a
that.
website called investopedia.com.
I love that website. Yeah, I've been using it heavy.
Have you used their stock simulator?
Yeah. I've used it in the past.
There we go. So that's
Hmm.
back in like 2016 or something like that.
Yeah.
That's when I found this thing, and essentially you can build an investment portfolio using, it's a game. It's a game where you can create a portfolio and it's following real life trends and real life stocks. Like everything that's happening in real life is being mimicked in that game. There's of course a time delay for updates and stuff like that.
Yeah.
But I think if you're trying to understand how stocks work, and how, different scales affect different decisions, you know what I mean? Like it's different when you're buying something with a couple $1,000, but it's also different when you're looking at something at like a higher scale, like 20, 30, 40,000 type of thing.
Yeah.
So I think it's important to kind of look into all those different tools that are there online, on the phone, that can kind of get your feet wet as far as learning how to do something. You know what I mean? Like before I ever played football, I played Madden, right? So,
yeah.
little stuff like that.
For sure.
Yeah. But yeah, I mean, look, I'm no expert or anything, but there's a lot of opportunity from keeping up with the market and looking at stuff like that. And that's all I would say. Just, be a little bit woke. Don't miss out on opportunity.
100%. Like the biggest thing, like the best piece of advice is almost like there is no such thing. Cause you say like, you're no expert. Like, I wish I could say that, like, there was such thing as an expert, but everybody learns by just making mistakes. The biggest thing is, don't be afraid, kind of go in there understanding that you're going to make mistakes. You're going to take some wins. You're going to take some losses. But there's ways, the more obviously, the more you educate yourself, you can go in there and take some calculated risk where, your mistakes are a little more calculated and you're not taking crazy risks that you would lose on in the long run and things like that. But bro, we do appreciate you coming on. We'll definitely, like I said, we'll have you back on, whether it's after you create more content or after you create more content or before. We'll have some more in-depth conversations about different things, maybe like we can maybe dive at some point into like our actual portfolios and some stocks that we've invested in that we're really high on and why. At some point down the line. But thank you so much for joining, guys. If you are not subscribed yet, I am not playing with y'all no more. Go ahead and subscribe to the podcast. You do not want to miss these conversations. We don't have time to be broke. 2022 is almost around the corner, and we got goals to reach. We got places to be. So make sure you subscribe. Give a big thumbs up. Go ahead and give a review on every single one of your favorite podcasting apps. I don't care what you use, as long as you listen to the content and all of that. Make sure you connect with us on social media. All the links are going to be in the descriptions. Make sure you connect with Jason on social media. His links are going to be in the description as well. But for today, y'all already know, make sure that you're taking the steps today in order to make sure that you're 1% closer to your goals than you were yesterday. Thank you for joining. Peace, everybody.
Peace. Thanks, Juju.